The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Today, traders, we're going to be talking about, again, focusing on 90-10 parabolic setups, planning, preparing, executing, building your muscle memory. What type of template do you have on the day? Pump and dump, dump and pump. But today we're talking about 3-day setups. It's Monday, day one, the front side of a new week. Monday, Tuesday are the front side. So we're often hunting out 3-day setups, 3-day, 3-session setups. And we're going to be talking about that today in our video. For the traders that have asked regarding the PDFs, all the PDFs for the playbook, notes, part 1, part 2, the basic weekly template cheat sheet that we just added, other chart templates and examples are in that first column underneath Best Playbook Trade Setup Workbook and Notes. All the PDFs are in there, and there are PDFs for each individual trade setup section in your course outline. Today we'll look at some examples of a day one, Monday, the opening range of the week, building your watch list and identifying pairs that could potentially setting up for a Monday parabolic trade opportunity, whether that's a 3-session setup on day 3 or a continuation trade, a range expansion, or a reversal trade opportunity. Now, I'm biased to the short side, and I'm often looking for pairs that are going to coil sideways, potentially close and breakout, and maybe break out a second time, triggering a new high of day, breaking down, pumping up, coiling into the open for an explosive reversal trade. Now, I repeat the phrase to traders to build your muscle memory, and that builds on understanding what exactly you're looking for. Not just kind of guessing and coming to the screen, but trying to filter out the pairs that could set up to offer this type of opportunity. Front side of a week. So front side day one is Monday. So a 3-day template could offer us a pair that maybe has formed a peak formation low on Thursday. Now, I've often said this. I'll repeat this again. This is not day one until a new high of day level is broken. Then the day count starts. This becomes day one. That becomes day 2. And what we look for, just like on any other day, is a day 3 that could be coiling for an explosive range expansion. It could be an explosive reversal trade around closing price, maybe pop high of day, coil and break down again. But we're looking for a 3-day opportunity. It takes 3 days of volume. So let me repeat this. It takes 3 days of volume often to set up a parabolic coil. So I put this chart up often on a Wednesday, day 1, peak formation, day 2, peak formation, day 3, consolidation for a parabolic explosion, whether that's a range expansion or a reversal trade opportunity. Now, this is an example of where we can have Monday, Tuesday, Wednesday range expansion, but this applies to any 3-day template. We can have the consolidation up high for a reversal trade. We can have the consolidation down low for a expansion trade on the downside. We can have the consolidation down low for a short squeeze and vice versa for the long squeeze. Now, you have to understand exactly what you're looking for in relationship to how price is setting up. There are only 2 templates when it comes down to the actual template on the day itself. We can have a pump and dump template. We can break a new day high. We can coil around closing price, but it will be a pump and dump template or a dump and pump template. Now, it's critical that you build your muscle memory and you hunt out the templates that match the best criteria for the templates that you have focused on regarding this particular setup. So if you haven't built the muscle memory on a day 1 or a day 2 on the front side of a week of what a parabolic trade setup should look like, then you should be willing to sit on your hands and wait. If you're hunting out trades and trying to guess a direction based on candle movement, then you've probably already entered into a 50-50 situation. Now let's go back to Monday again, day 1. We could have a situation where potentially closing prices in the middle of this range and we've formed a
sideways coil around closing price inside, and this market may set up properly with higher highs into the New York Open or into the 820 currency metals open or the 9 a.m. oil open, a peak formation low, peak formation high consolidation. We could see this set up high for the close-in breakout. Again, as I mentioned, breaking the high of the week, triggering longs at the new high of the week, breaking down and pumping back up and coiling at closing price for the parabolic explosion. Now, sometimes we'll just see a session trade. We could see a session trade that might trade back into a lower peak formation low from the U.S. session. We saw that in some of the U.S. indexes today. New hour began and they began the reversal back up, but this was still a 100 pip move down from the coil at the open on a failed breakout, a market that closed in breakout on NASDAQ and S&P, a market that coiled sideways on the DJ30, a 3-day setup. Now, I want to emphasize we are on the front side of the week. I talk about this every single video, front side, back side. Day 1, day 2, day 3 can expand the range and form our box. We can have a trade setup that works into the high, into the high, into the high, giving us a first red day and blowing off on Free Cash Friday. A lot of the templates will vary depending on the economic calendar. What template are you looking for? Or are you just trading your favorite market and trying to sell the high and buy the low? But I'll repeat this. All price action is not the same. This trade setup where it blows off parabolically for maybe 200-300 pips on indexes or oil or gold, large moving markets, volatility, is not the same as catching the high and catching the low and trying to catch the move. And until the timing and the setup is right, these markets are not ready to explode and move in an all-in direction to the close of the day. So if you have 5 charts open and your moving averages are giving you higher highs and higher lows and wicks and looking for a little bang, oh, we got to move, where are you going to put size on? That's the reality. And I'm hunting out opportunities that sitting on my hands, I'm letting them set up, and no matter whether I'm looking for a session opportunity on day 1 on the opening range of the week, I understand that it's front side and we can still be establishing our high and low for the new week. We could certainly blow off and give a nice parabolic coil at the New York Open, but we may also see a market come back up and on day 1 expand the range before pulling back inside and consolidating. So what setup are you hunting? What setup have you mastered? Looking for a first red day or a first green day on a Monday, unless it's a specific type of behavior of price on the day, for example, an outside day on a Friday or a Monday, that could potentially, high of month, high of week, be indicating to us that we have a reversal template possibly setting up for the week. But for the most part, we're looking for opportunities as the template builds heading into day 1, day 2, day 3 on the front side of the week. Well, this is an example of what we just looked at on the Russell 2000. Now, we can look at this type of opportunity on several different markets. The important part to understand is that when you have a market that closes in breakout on a Friday, you may potentially be able to identify a 3-day setup opportunity. Peak formation. That's our day count. Day 1, day 2. We have a high of a week on one of those peak formations. It doesn't matter if it was the other way around and Friday was the low of the week, or if Thursday was the low of the week and they consolidated down low. They could have consolidated down low and gave us a similar opportunity near the low of the week, the lowest closing price in the last 3 days for a potential parabolic coil and a reversal or trend trade setup. Now, what type of template did we have on the day? Are they working the high or are they working the low? Well, they've broken the high of day. They've broken it again. They've made a lower low on the inside, and they've pumped up into the high of day, into our U.S. window for the engulfment at high of day level. Now, for the purposes of this video, we're not going to get into timings and the understanding of the rotation of time, but we will talk about the New York Open, the third hour. When the third hour begins, we have our coil at our consolidation low of day of the bodies. Above closing price, Paul Tudor Jones, think of your entry point as last night's close. This is a 3-day, 3-session parabolic setup. High of week, new week beginning, high of day to low of day for an all-in, zero stress, zero emotion, parabolic trading setup. Now we can go to the 5-minute and we can even forget about a first hour opportunity. There was no major red news on our calendar. We're at the high of the week on the third day from a Thursday, Friday setup heading into our new week. We have a coil in our third hour at closing price. After the market is already broken down, we have a broken down market. We have a low-hanging fruit continuation coil third hour after the New York Open for the move down to the low of the day. Zero stress, zero emotion. So this type of setup shows up again and again and again. Now, number one, the first type of situation that we can look to maybe identify markets that might offer us this opportunity on a Monday are markets at close and breakout. Then we can go and look at the template. I can run through 20 instruments in a matter of 5 minutes, indexes, metals, energies, and currencies, and see whether or not I have any pairs that have closed in breakout. And then number two, have they given us a Thursday, Friday template? Now, sometimes we're going to get an inside day. We talked about inside days in our last video. We might have a Wednesday, Thursday, Friday, where one of those days is an inside day, possibly a Thursday or a Friday, but we still have a peak formation at the low or high of the week or high of a day. We have that, therefore, consolidation now inside of that range, but this market closed in breakout, so it's out of balance. Go back and watch the other videos. Now we can potentially either have a market that goes higher and could explode for a range expansion. What type of template sets up on the day? Breaks a new high, makes a lower low, pumps up again. Lower low, pumping back up into the high of day, coiling for our parabolic collapse back to low of day level. Now, we saw a similar example of this in the indexes today. We had the NASDAQ and the S&P both close in breakout. We had peak formation low of day on Thursday. That market broke higher on Friday, making new highs and closing in breakout. So that gives us a 2-day count, Thursday, Friday, day 1, day 2, potentially setting up for an opportunity for either a session trade, a parabolic range expansion, or a parabolic reversal range expansion on Monday, day 3, opening range in a new week. Friday was also the highest closing price in our week. So we have a market that's closed in breakout today on Monday, day 1. And I want to come back to a very simple concept. When the new week starts, we have Friday's closing price. That's where the auction process starts from. We make a high. Right off the bat, they make a high. They make a low. The market continues to auction higher in the Asian session and then the Europe window, making higher highs. Higher highs, higher lows is a potential dump and pump template. We talk about that. Higher highs. Now the question is are they working the high or are they working the low? Well, clearly they're working the high. Making new highs, they break the high day level. They trigger breakout traders just prior to our New York US session 12 candle window. So we've made a high of day in the London session. Now once that's complete, I will often move my low of day level underneath the bodies. Now, if we just scroll this back and look, we can see where the last peak formation low of the US window was made there. Now, the purposes of identifying that is that heading into the new day, that's our consolidation. That's our box. We made a market that closed in breakout. Which way did it close in breakout? It closed in breakout long. Asia made a higher low, and then we continued to make higher highs. So we've broken the high of day level. We've now expanded the range on day 1, the opening range of the new week. So we've gone higher. So now we may potentially have a market that's making new highs. We dumped down at the New York Open. Now, several traders took this 5 minutes into the New York session. we'll put our universal entry criteria into this trade. This is a 5-minute chart. Now, the reason I've put the low of day level underneath the bodies is that in certain instances, this market may not clear all the way down. We've made higher highs, we've closed in breakout. We may be in a market that's driven by other time frame buyers. We've trapped volume above closing price. Now, I'll just show you a really simple thing, is that we've got 3 levels of involvement here. We've got our below the breakout level, the low of day level, the closing price level, level 1. Level 2 is above our breakout level. So they've come down, they put a peak formation low, and we're in level 2. They've broken out, made higher highs before coiling and reversing at the New York Open, coming out of level 2. That is a 100 pip move on our 5-minute chart. Now, this is a parabolic coil. Like another example of where traders will say, well, that's the size of this particular candle on the entry is a 50 pip candle. Now, I've made this clear in each video. If I enter into a parabolic trade, the max stop on the trade is 25 pips because it should explode. It should be like a bow and arrow, pulling back and coiling for an explosive move. Now, some traders were waiting for the reversal opportunity into the new hour. But this was an excellent opportunity, high of day, breaking out again, a market that closed in breakout, it broke out again, coiled into the high of day level, coiling into the high of day level, making a lower low, pumping up, coiling into the New York Open for the explosive short trade. Now, this trade's 15 minutes long. It's 100 pips in 15 minutes. But traders have to understand, is that the setup that you are looking for? Now, traders are looking for this. This is the trade that they want to take. They're done and dusted in 15 minutes. It's over with. On day 1, we have a rectangular coil sideways from the U.S. session, a 3-session setup. Asia, London, New York. We're working the high. We're coiling into the open on a 3-day template. Now, this is an example. We just looked at the Russell, where it went all the way to the low of the day. In this particular situation, it's a nail and bail. It gets to the low of day level and consolidates into our peak formation low made at the beginning of our new day on Monday. Now, some traders were a bit more savvy and finessed this on a shorter time frame, a 1-minute chart. 8 minutes into our U.S. session, same thesis, same setup, because they knew what they were hunting for. Zero stress, zero emotion, and with the reversal trade, some traders were looking for the reversal coil. Now, there's 2 types of situations here. I have a market that I see as an example of a sideways coil to size into for the parabolic collapse, whereas other traders may position themselves into that reversal, even though they're confident that this market will definitely retest the opening range and the high of the day level. But again, which setup have you mastered? Which round kick are you focusing on? Let's go back to our template. Thursday, peak formation. Friday, peak formation. One of those can be our high or low of the week extreme. And then a market that closes in breakout at the highest extreme or the lowest extreme into a new week. That can give us a signal heading into our Monday for a 3-day setup. The same thesis can apply on a day 2. We can have a market that closes in breakout for a parabolic coil range expansion. Day 2 typically expands the range in a new week. So important. So we will be focusing on identifying characteristics for building your watch list each day. This is one type of setup. I'm going to put a cheat sheet together for Monday for day 1 and for Tuesday day 2. On the front side of the week, which type of signals can alert us? We've got signal days, we've got our inside day, we've talked about that, we'll look at that again. We will look at different types of scenarios, but you only need to find 1 or 2, and if you don't find any, be willing to sit on your hands and waiting to see if we get an opportunity Wednesday, our midpoint range of the week, or on the back side of the week heading into free cash Thursday and free cash Friday. But it's important to know exactly what template, which best trading setup that you are hunting each and every day. I like to look for shorting opportunities. This is one of my favorite types of opportunities. Inside days on Fridays or markets that form a 3-day setup. If you keep it really simple and focus on the simplest setups, find the instruments that are set up for those opportunities each day. Heading into our new trading day, we got a new week. We got day 1, day 2 on the front side. We'll be heading into free cash Wednesday. And we may be waiting and sitting on larger opportunities. We have CPI this Wednesday. It's a large mover next to NFP and FOMC. It's probably the third largest moving major red news announcement. But the simpler you make it and remove the analysis paralysis, the easier, zero stress, zero emotion, and more profitable your trading will be. Lock in the money, get off the screen. We'll see you in the next video, traders.